Good morning, guys. Okay, so for this video, I was going to do it a little bit differently because I thought I could kind of get into a little bit more detail with the live trade, but it's actually looking like the editing is going to be even more difficult. So I'm most likely going to go back to the other way of doing it for the next video. Now, I haven't posted a live trade in a couple of weeks. So 2 weeks ago, I wasn't at the charts. I was out riding my motorbike. It wasn't very exciting. I was taking it to the garage because it was due service, and obviously in Scotland it was peeing with rain. Last week I took a trade on the Tuesday, so everything else was break even. So the Monday, this should be the Monday. It's a break even trade, break even, and then on the Tuesday, that was basically a break-even trade. It wasn't what I wanted. It was that's a DAX. It was a blind entry, which I got out of pretty quickly because it started rejecting. And then that was the trade that I took on the FTSE. So £671.30, but in total for that day was £731.57. On the Monday, just break-even trades. Now for today, what I'm going to do is bring up the live trade now, and hopefully I should be able to kind of talk through it as it is running, and then I can kind of show you things on the screen as it's happening, because that means I don't have to pause it, and I can just kind of speed it up and I can slow it down, and it can all be sort of a linear progress. Well, that was the idea. So for this trade, it was on the 16th, which was the Monday. Now, basically, although the market had been making lower highs, you can see that it was kind of hitting into a sloping support level on a support zone that I already had marked up. So it's already telling me that the bulls are stepping in over and over and over again, and then it starts to hold around about the sort of the base of that zone. Now it tries to bounce, it comes back, and it puts in a second holding pattern. So now it's looking like it's holding sloping support, and it's also holding into a little bit of a double bottom. So I'm looking to enter above the high of the candle. One of the kind of things I'm always looking for when I get setups is how much kind of clean space is there for the trade. So where am I going to be hitting into potential resistance? And when it hits into those levels, then I'm kind of thinking to myself, okay, so how good is the setup, first of all? The reason I'm asking myself that is because if it's a very good setup, so if I'm looking on the daily time frame and it's looking really, really good, and then if I come onto the 5-minute time frame and it's exactly what I wanted, then I'm kind of thinking, okay, I want to hold on to this trade, even if it hits into a little bit of kind of chop or resistance. If it's not a perfect trade, I want to be a little bit more cautious. So as you see when I brought up the Monday and Tuesday from last week, there's a few break-evens there because I'm very happy to get into a trade and then kind of see how the market reacts and then make my decision, it's what I do very often. For this one, I wasn't overly keen on just holding on to it, which turned out to be the right decision. Now, I'm looking up above, and I'm saying, okay, where has the market been hitting into? And I'm looking into the actual daily level that I've got on the chart, so the horizontal support and resistance level. The market's kind of been holding around there. We also have a little bit of a doji candle there with a very small open and a close. Open, close, high, low of a candle, they're the very important parts of a candle. So I'm looking up there and I'm thinking, okay, the market's already held up there quite a few times, so that's the first area of potential reaction. Now, as the market then spikes up and tests into that level, I'm considering my stop at break even. You can actually see as it's testing up there, my hands sort of coming down to the buttons that I have on the bottom right of the screen, ready to close out. Now, at this point of a trade, invariably, this is when you have the sort of the bad person sitting on your shoulder, and it's saying, especially when it starts to spike back down like it is in this trade. And that voice is saying, maybe you should just give this a little bit of wiggle room because you're going to miss out on some profits. Maybe you just shouldn't bother coming out at break even if it hits break even. That voice will cause you so much hardship. I used to do it over and over and over again. I used to listen to that voice. And then the funny thing is, you're talking to yourself and convincing yourself to let it have more wiggle room. But the second it goes into negative, that voice changes. and it changes into a voice which is saying to you, what the hell have you done? This is a stupid idea. So it goes from encouraging you to then ripping you to pieces. And when you start to become more familiar with this voice, you learn to kind of ignore it. So I'm just kind of hovering, getting ready to close out the trade. And then as it spikes back up again, I just hit the break even button. Then I don't have to think about it anymore. And I'm looking and I'm thinking, okay, so I'm not really looking at this trade as a potential runner. So I'm looking to kind of get out a little bit earlier. And then I'm looking and I'm thinking, where is the sensible area to do this? And you can kind of see where the market has been hitting into resistance, and it's also a little bit higher, been testing into support. So basically where that splits. For me, that becomes a good area to exit because it's very likely you're going to see some sort of reaction. Now, we also get a big, strong bullish candle. And that big, strong bullish candle is going right into those levels. So that's telling me if we've had a big move up like that, there's most likely going to be some sort of a reaction, some sort of a pullback, and my stop is at break even and it's pretty close. So am I going to risk maybe another 1 point, 2 points when this market is very likely going to come back to break even? And that's how I'm making the decision to come out of the trade. And yeah, it ended up being pretty good because the market ended up spiking up a little bit higher, maybe another couple of points, and then it did come back down to where I would have been break even, and it would have also stopped me out. So it's the right decision. The thing is, you don't always get your trade decisions correct, but you're looking to do it over an extended period of time. You don't need to be getting the perfect exits on your trade. You need to be getting the exits which are going to leave you profitable overall. And that's really how I do it. When I've not got a trade which is looking like a perfect trade, I'm looking to be a lot more cautious and come out of the trade. So you've seen the break evens when I brought up last week's Monday, Tuesday. And then you've seen the one that's kind of £670. That was one of the ones where I was in it and I was thinking, okay, this is a runner. I'm expecting it to hit a certain point and I'm holding that trade until it hits that point. Obviously, sometimes you get it wrong, but for everything else, I'm being a lot more cautious. Okay, so that is everything for this week. Hopefully that was helpful. Sort of change it up a little bit because when I'm actually doing the live trades, it's quite difficult to kind of talk around everything when I'm also in the trade, watching the trade, and it kind of it gives me more of a chance to make a mistake when I'm doing that. So this allows me to properly talk through it, go through exactly what's going on in my head, exactly what the setup was doing, and exactly what I was looking for. So as always, guys, I hope that was helpful. I hope you are all having a fantastic trading week. I'm James Orr, and thank you.